We Gucci? We Gucci in the coochie. What's poppin', y'all? I hope you guys have been well. Man, I have been well, but very busy, and I'm finally calming back down. And I'm super happy because that means I get to post more videos, get to spend more time in front of the charts and make stuff for you guys. At the moment, AKFX, the YouTube channel, has been really dry, and I apologize for the lack of content, but I'm somewhat back. I try my best to post at least one video every 2 weeks at the very least, so that's somewhat consistency, but if we can up that frequency, of course, that would be even better. So anyway, let me come back to the point. I want to make this video shorter than usual. I'm just going to be covering one trade that has in fact already been covered on AKFX, the Telegram channel, link in the description if you guys want to go ahead and follow that. But that's more of a screenshot this, screenshot that, and then post it to AKFX. You know what I'm trying to say? Here I'm trying to give you guys a bit more of a visual representation. That's also visual, but here more visual and audio representation. So hopefully that can help other people who may have not already been subscribed to the Telegram channel AKFX. All right, with that being said, let's move on. So my trade that I'll be covering in this video is just going to be the sell that was from this top region over here. Now this sell actually went on for about 1,002 pips. So let's just say 1,000 pips. No one's going to be holding it full position all the way down here. Not a single human being. I can guarantee you that, unless of course they're on demo accounts. So I will be talking over a couple points. We're going to be talking about POI based off of the, of course, high time frame. We're going to be talking about I don't know, entry confirmation, if you want to call it that. And we're also going to be talking about exits, very, very important. And yeah, that's it. So using all of these concepts, of course, we're going to be talking as usual when it comes to smart money concepts. I always include liquidity and structure, and that's about it. If you guys wish to add yourself a splash of ICT kill zones, hey, go for it, man. If you guys want to discipline yourself, you guys want to add to more discipline and win rate, some may say win rate, add yourself some kill zones, because I know it has definitely helped me in the past, and sometimes I still use it as a reference point to this day. Why not? If something works and something can help, let's use it, right? So yeah, big up ICT, Inner Circle Trader, Michael J. Huddleston, big up to him, shout out to him. If you guys want to go ahead and check him out on YouTube, his name is just Inner Circle Trader, that's it. Great smart money content, and we all as smart money creators owe respect and a need to, how do I say this, credit him in our works, in any kind of smart money concept works that involve, of course, smart money. So with that being said, let me move on. I apologize, I've taken how much time? This is what I mean by I just rant, bro. 2 minutes, let's get into it, man. All right, so first thing, that's probably going to be the, I guess, the most confusing / toughest thing here is, why on earth am I looking at this POI? What on earth do I mark on the chart? Because we don't have ourselves a strong high from a weekly perspective. We also don't have ourselves a strong high from a daily perspective. Where is the stop hunt? Where is the break of structure? Because the reason I say that is because you guys may be like, oh, well, Avi, you dumbass, there's a freaking stop hunt right here and a break of significant structure here. Right? That's our strong high. You're right. You're absolutely right. But that move is long gone with these entries. You see these entries here that I'm marking out with red? Those are the entries you would have taken based off of this setup, which is perfect. You're absolutely right. This would have been a strong high and a weak low for sure. But that's not what's happening right now though. So why on earth am I still picking this area? It comes from the understanding of premium and discount / buying high, selling low stuff. Selling low? My bad, what the hell am I saying? Buying low, selling high. Oh my lord, bro. This is a brilliant time for me to interject and say that I am not a financial advisor. Definitely not after that one. Oh my lord. Imagine if I slipped up like that and I'm a financial advisor. Bro, I'll be freaking living on the streets, God forbid. But yeah, so let's talk about this. So how could you have marked this? Why would you even mark this in the first place? For me, I'll tell you exactly why I was looking at this area for sells. It's because I simply would not have looked at this area for buys. Yeah, no, I'm not joking. I'm not trying to be funny. I would not look at this area for buys in any sort of manner, because I know that whilst, yeah, sure, it could play the wild card and work, just like how, you know, Avi, I'm sure you wouldn't look for sells over here, but how come price retraced back up and sold? You're right, but did it last though? I'm a swing trader, guys, and I'm not saying you guys should be. I'm going to talk about this in a future video. I'm not saying you guys should be swing traders. I'm not saying you guys be intra. I'm not saying you guys be scalpers, play just kill zones. No, I'm not saying any of that. I'm saying what works for me is intra and swing. That's it. I am not the world's best scalper at all. Playing with M1, M3, M5 is great, but I don't thrive in that environment. So I've spent over 1.5 to 2 years just figuring out what is the optimal way for me to trade? And the way I found that out was to spend many months, and some may say years, to fail with different methods, to fail with different styles of trading, which is exactly why there are different styles of trading. Hold on. I took a buy right here, by the way, guys. It's a beautiful, beautiful buy. But yeah, I expect, like for gold, no cap, I expect gold to be like above this high right here. Like around here would be great. I would actually genuinely consider selling around like inside this area here. You know what I mean? Like it could be higher, of course, it could be higher. But I'm saying I'm gonna look, like I'm gonna wait for reactions inside here. You get what I'm trying to say? Like the sells here, they're cool, but they're not exactly the world's most high quality things. You know what I mean? Just give me a second, guys. I have a call. Give me 1 second. Alrighty, I'm back. I'm done. 5 minutes in. Let's get into it. So, what I want to say, yeah. So like I'm gonna be looking at like reactions over here. Just gonna give you guys a rough area, man. Just like a rough area. You guys, this is not the point of the video though, but you guys get the point. Like around this rough area. Okay, let me get back to the video. So I hope you guys understand why we would be looking at this area, which would be at the weekly hidden base right here. You could draw it as the entire range, which to me is a little bit counterintuitive, understanding that the range is over 340 pips, which this would be the IPA, and this would just be the order block in itself. This would be the order block. If you wanted to draw the entire supply zone, that would be how you would draw the entire supply zone. It is freaking cold in my room. Give me a second. All right, I'm not wearing much on top, so yeah. But for me, I wanted the range to be small. So especially when you're trading smart money, it's nice to have a small range because then you can use a little bit of a lower time frame. Now this is the weekly, and as I said, we understand that price hitting up in here, it makes sense for us to look for sells, right? Is there a strong high low? No, there isn't. However, we understand that it makes sense for us to look for sells, and especially in these instances, it's great to note that we have ourselves that bit of inducement right there into our area of interest, right? So instead of thinking that, oh, 100% price is going to fly, how do you know price isn't going to react here? How do you know price when it flies over here? It's not just going to fly to the top, but rather react in here. You want to know why? Because we know that we have an area, as you can see, I'm marking out the just a rough area, just like how if I were to mark it out right here, you see, we have areas that make no sense for us to look for buys at. It makes sense for us to wait for a reaction from these areas, wait for a reaction in these areas, and attempt a hedge. You see, or maybe you're not even in buy, so you want to attempt a reversal. It makes sense. These are areas that add sense to your trade. So anyway, price hits in there, and what happens? Well, let me go ahead and actually mark this out properly. Go and just mark this out properly, just like that. Weekly hidden base. Daily, let's see, what's on the daily? You want to mark the daily IPA? That's a brilliant refinement, right? The daily IPA, however, would be that, which is not a good refinement. Oh, but this is nice. This is nice. It's a nice daily hidden base that halves our zone from the weekly. Now, I want you guys to understand something. When you're doing these kind of refinements, right, still keep in the back of your head that there is a weekly IPA here, because price can come in just like this. Let me just assume that price is coming in. This pink is the weekly. Okay, price heads in, and the H4 does that right here. It doesn't go to the top. It doesn't go to the top. That, you know, that little refinement we made, it doesn't go there. It's sort of just like, just touch and goes down. You do not want to be blindsided. I think I just had a voice crack previously. You do not want to be blindsided. So keep that in mind. But the reason, for the sake of refinements, we can use a little bit of a lower time frame. Maybe you want to go to the M30. You know what? Maybe you want to go even, yeah. Like for example, I'm just giving you guys an example. So the smaller the range, the lower the time frame you can use. Now, I'm not the biggest fan of a low time frame structure play or liquidity play for me to attempt a reversal. No, I'm a big fan of higher time frame plays to dictate a reversal. Higher time frame in this case would be something like the H4. It could also be something like the H1, for example. In this case, like, you know, what I mean by high time frame is in relation to me looking at a 5-minute bearish QM. You know, it's not that it can't work. No, it's just that I've seen better results with waiting for the higher time frame. So anyway, coming back to this, we have our weekly. Now guys, I just want to run things back. I really hope you understand why I'm even looking at this area for a sell. Now, before I even get into this reaction right here, which you can clearly see, I mean, you can do the rest, right? You can do the rest by yourself, right? It's a bearish QM, and you guys know why you would sell. But I already know and can imagine where the sensible areas would be for me to take profits, right? Immediately, let's take a look at the reaction first of all. Immediately after the reaction, let me really spell out this reaction here, because there are some people who may not be too quick, and that's okay. That's fine. I'm here to spell it out for you. Hey, why not? Right? I have nothing against that. Okay, we have ourselves that. But if you guys want more detail when it comes to the liquidity, here you go. Right? I mean, when I say liquidity, I'm talking about the inducement. Right? Giving context to your trade. You guys heard of that word before, right? Give context to your trade. Give reason behind your trades. You know what I mean? So the first reason would be a stop hunt. Second reason would be a bearish break structure. And what's the third reason? That context, that liquidity. Now, you may look at this as liquidity. For me, I think the easiest thing here is understanding that this high failed to create a lower low. Basically did something a little like this. Failed to create a lower low, right? And so this acts as a weak high and as an inducement, and price can come in. Now understand something, guys. I've mentioned this countless times. No, well, not countless times. I mentioned this before, guys, in previous videos. Whenever there is a reaction, I've got real passionate there with that whenever, man. But I am passionate about this stuff. Whenever there's a reaction, my friends, always know, bearish QM, bullish QM, I don't care what your reaction is. Always know that a new POI, or in this case, new set of POIs will be created. Okay, just know that every single time a new QM, a new stop hunt and break of structure happens, it's simple. Every time a stop hunt and a break of structure happens, significant break of structure happens, there will always be, 100% always be, a new POI. So once we see this, all right, and sure, again, as I said, sometimes you gotta spell things out. That's okay. Okay. All right, that's a bit much. I think that suffice. Okay, so that will suffice. So we have ourselves a failure to create a lower low. That high right here is the liquidity. We expect that to be taken, right? What are our POIs? It's the time has come, my friends. What are the POIs we'll be choosing? Well, let's take a look at the daily. Maybe there's something on a big scale. I don't really see anything besides the fact that if we were to look at it from here, from this perspective, right? We created a IPA. Right? Okay, that's a really big time frame though. We need a little bit more detail. Well, let's get ourselves a little bit more detail. So, can we see that we have ourselves a 4-hour IPA in here? So, well, IPA and a hidden base as well, right? But let's just mark again, if we mark the bigger zone, all we have to do then is just hit onto a lower time frame and refine them. You see? But if we start off by just tuning our mind to just refine, we're going to get blindsided and we're going to wonder why on earth that didn't work or why price missed our POI. But granted, yeah, there are instances where price just genuinely misses the POI. Okay? So, price hits in. This is our higher time frame, guys. This is like over what? 150 pips? No, 119. Excuse me. 119 pips. I got a bit overzealous there. I don't think that's how I use the word. But yeah, we got over 100 pips. Okay? Fair enough. Price hits inside here. What POI? What other POIs are there? Let's go to the 3-hour. Let's see. Well, we have ourselves a 3-hour IPA. Brilliant. Wow. I didn't look at this when I was actually, because I took a trade here and I also took a trade here. Everything has been posted at AKFX Telegram. If you guys cannot find it, just leave me a comment and I will pin. I will tap it or pin, the screenshots of my entries, because I did actually take these entries, but not with the same reasons, but I did take these entries. So, oh my gosh, I need to mention, I'm sorry for the time taken. So many people took this trade with me because I called it out beforehand. I called out the area I was looking at a reversal, and I was also telling you guys that if there's a breakout bearishly, I will 100% look for sells. Bro, so I think well over 10 people freaking sent me screenshots in the DMs, right? That they took this trade right here. Some missed it, some took this trade. Bro, I am so proud of you guys. Genuinely, from truly, I am so proud of you guys for taking the exact same trade, because this is you know what I mean? It's one of those textbook opportunities that you don't want to miss. And plus, it swinged for over 1,000 pips. And even if you were to take super logical take profits, you would have gotten yourself easy 150 pips. No question about that. Easy 150, 200 pips. We'll talk about the exits later, okay? But yeah, so that's the 3-hour. Let's go to the 2. Let us go to the 2. Now the 2 is even more refined. So what I would like to do in these instances is just draw a little bit of a horizontal line, just right over there. 2-hour POI, or because I want to be a little bit more specific, 2-hour IP or OB, whatever you wish to call this. The point is there's a POI. Yeah, if you get confused, it doesn't matter. There's a POI to look for a sell at. Okay, this is 2-hour. I feel like it's a little bit too refined. Let me just pay attention to what's happening in here. So let's take a look. 1 hour. Oh well, first of all, before that, we have ourselves a 2-hour here as well. Hey, remember, Do not get blindsided. A lot of people, especially when they're doing this hindsight stuff, they'd be like, oh yeah, I definitely just took the trade from the top one. I totally didn't, you know what I mean, fall for the trap in the lower one. No, I'm here to tell you, I took a sell over here, and I'm telling you truly, as a transparent trader, or at least a trader that is trying his best to be as transparent as possible, I took a sell over here and I got myself hit at a stop loss. I'm being very honest with you guys. Okay, not a lot of people are going to say that, so I'm just telling you, I'm being very honest here. Okay, when we look at the H1 now, we have ourselves two POIs. We have this one here, which is the H2, which is MTF with the H1. That's actually why I actually looked for the sell. So we have ourselves a H2/H1. It doesn't matter what you're typing in here, just know that it is a POI. I'm typing this out so that people who may not be too fluent with my previous point of interest video where I talk about and go over IPAs and hidden bases, so that they can sort of get a little bit of a refresher, you know what I mean? So yeah, we have this as our first POI. Now guys, just for the sake of cleanliness, I'm gonna get rid of these markings, guys. You can go ahead and mark that up on your own chart, but I'm gonna get rid of these markings. And guys, please, if you can't know what's already happening without the markings, you need to backtest more. Excuse me, that's rude. You need to backtest more, and you need to seriously look at the charts more. Okay, so yeah, basically we know we are looking for sells inside these two POIs. There's no question about it. We're looking for sells inside these two POIs. Price heads up inside here. Again, understand that we took the liquidity. Price heads inside here. Now guys, before we talk about the next thing, I hope you understand why we're selling from here, or at least looking for sells in here. I hope you understand what the entire thing, what the entire deal was of me putting up these two POIs in here, why I did that. I hope you understand why. Okay, we had ourselves a bearish QM, which is signaling to me that we could be selling off from the zone. We'll get to exits later, but I want you guys to understand step by step, slowly, level by level. Okay, and now we have these two POIs. Price hits inside here. Beautiful, beautiful zone this IPA was, but unfortunately, man, even the most beautiful things can not work sometimes, right? So price hits inside here. Let's take a look now. I don't think I can go back to the M1. I don't even think I can go back to the M5. Yeah, I can't. I apologize. But basically, you guys will have to check this out on your own premium TradingView. I don't bother to buy TradingView. I'm sorry. I don't use TradingView for analysis. I use MT4 on my iPad. Price headed inside here and gave me, I think it was an M1, M3. Well, I didn't use the M1, M3. I just entered based off my own things. But I know that a couple people definitely did take losses on this, and don't even feel bad about it. I took a loss as well. Over here was an M1 to M5. I think it was a bearish QM with an inducement and everything, guys. And the first one was actually a break-even trade. The second one, unfortunately, would have hit you out at a stop loss. Okay, that's just unfortunate. It is the way that things are. So you would have definitely taken a break-even trade here, but 100% if you would have waited for reactions in here, for sure, you would have unfortunately taken a loss. Okay, moving up then, I think this is where the loss was. Boom, just like that. Here's where the break-even happened, and then here's the deal with the loss. Okay, again, if you guys want an M1, M3 perspective, everything has been uploaded to the AKFX channel. Scroll up a little bit. I promise you, you will find the M1, M3 that I was explaining. Price hit it up, and now, oh man, okay, price is no longer in this POI. That's fine. Price is in the top one, and the top one would be that, I'm just going to the time frame. The top one would be that H3, H4, right? H3, H4 plus H1. Look at the H1 too. Just marking the IPA. This is the candle for the IPA. This would be the hidden base. See, in this instance, the hidden base gives us a bigger, more unrefined range compared to the H1. All right, so price headed inside here, and guess what you do? You'd go to the lower time frame and you would do the same thing that you did before. Doesn't matter if you lose, you're doing the same thing that you did before. I can't show you the M5, man, I apologize, but check the M1, guys. For those of you guys who've paid for TradingView, check the M1. Don't put that payment to waste. Check the M1 in here. It gave you a beautiful trade based off of the M1, and you can see how we can, confidently use the M1 because our trading range, the range we're looking at price, is a lot smaller. It's 40 pips on gold. That's like what? 15, 20 pips on Euro USD. A really nice skinny range. And if you did not look at the M1, M3, M5, that's okay because higher time frames will give you a similar hint. And if we look at the M15 right here, guys, we can see that we've taken out the liquidity. Right, so if I were to just draw it really roughly for you guys, just draw it really roughly. We've taken out the liquidity with this. What is the low that caused the high? The low that caused the high. That's what I see, at least. Some people may say this is the low that caused the high. Okay, doesn't matter, because if you consider this is the low, I didn't do that, but if you consider this is the low, that would have been the break. Nothing wrong there. Maybe you would have taken this as the stop hunt of here. This would be the inducement. Are you guys following? This would be the stop hunt of this. I'm talking about real refinements here, guys. Things that are completely unnecessary, but real refinements. This would have been the liquidity. Price comes up, take that liquidity, and would have dropped down, right? But how I would have looked at it, okay, from an SMC standpoint, sell, buy, break right here, right? This could have been your lower time frame liquidity, but based off of an M15, we can see we have a sell, we have a buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. You know what I mean? So like this, that would have been your liquidity right here. This would have been your point of interest. Now we know, oh Avi, I don't know, sometimes I place my stop loss here and I get stopped out. Who the freaking hell told you that that was a safe area to keep your stop loss? Who told you that? I'm sorry, I won't complete that sentence. But I know that a safe stop loss is right up here. Does that mean that price is just not gonna freaking touch that ever? Like every single time you sell, you put a stop loss there, you're just gonna be a freaking billionaire? No, you're not. It's not always gonna work, guys. Understand that, please. It's not always gonna work. Okay. All you need in the hold on, a little bit of psychology here. All you need in the markets is an edge that is significant enough for you to make money. There are people, for example, Michael J. Huddleston, who has, I think he mentioned this, don't quote me on this, but if I'm not wrong, he mentioned that he had supposedly a 90 to 95% win rate. I shouldn't say had. I believe him when he says he has a 90 to 95% win rate, because I've watched his commentaries in the past and I believe that, right? Why isn't he sad about not getting a 100% win rate? I don't know, but I'm going to assume for you guys. I assume it's because he can make a crap load of money from just 90 to 95% win rate. Do you need 100%? No, you don't. No, you don't. And I assume, I'm not him, I don't know, don't take my words out of context, but I assume that it's because you don't need, just like how I have around a 72, right now I'm actually doing really well, I'm not gonna lie to you guys. I'm actually doing really well. Like the markets are blessing me. I'm having around an 80-85% win rate. I very rarely take losses. Most of my losses are on like high risk trades and stuff like that. But like on my compounding account, it's been weeks since I've taken a loss. I don't take many trades on there. To be fair, I take like one trade per week on that compounding account. You know, the little, I did like a 25 USD to 600 USD compound, slow but steady. And I'm so far like 2 months deep in it. And yeah, so like with that, I very rarely take losses. Sure, I did take losses, sure. And I'm pretty sure I'm going to take more losses in the future. But the wins, you know what I mean? It happens way more often, you see? So I'm not beating myself up for now. Oh, MJH has a freaking 95% win rate. I'm going to kill myself to get it. No, bro, I'm not doing none of that. I'm happy with my 80-85% win rate. What I know I can do to improve my win rate is to, for example, on my compounding account, I was taking quite a few losses before this, right? And I realized that, wait a second, it's because I'm incorporating high risk trades that didn't have too much context to them, just because I wanted to be early on in the trade, and that was taking a toll on my balance. So what did I do? I said to myself, let's scrap the entire trading plan, go back to the drawing board, and I made myself a brand new trading plan which said I'm never going to take a trade on that account unless it is confirmed, quote unquote, meaning after a breakout. Just like this trade, you see, I wouldn't take this. I wouldn't take the one at the top. Maybe I'd take the one at the top of my swing account where I can afford to take more losses, right? Because I have a bigger capital and stuff like that, right? With my compounding account, I'm trying to not over leverage, but I'm trying to use a bigger lot size than is very healthy. Let's just put it that way, right? So because of that, I need to rely on my win rate, right? So I would take it after the breakout happens so that minimizes my risk, because the signs of the market is telling me, oh, okay, you know what I mean, that hint is there, that footprint, if you will, is there. So with that being said, I just want to give you guys a little bit of psychology here, man. You do not need the world's highest win rate. You do not need the world's highest RR. Figure out what is making you lose and figure out what the correlation is between your each and every win that you get. win number 1 to win number 10 that you got in the past, let's say 2 months. Okay? I don't know how many people are taking 10 trades in 2 months, but you get the point. Find out what was the relationship between those trades. Maybe you've got a hold of your signature setup. And that is not something that is plug and play, my friends. That is not something I can teach you and you be like, okay, I'm going to use your formula to success. Because guess what, guys? That is a formula that I found out for my own success. You get what I'm trying to say? Which is why there are some people that, their mentors teach them scalping, right? But I don't even care that I'm eating into time here. I'm literally giving you guys genuine suggestions. Like, I find this really valuable because it helped me. Psychology, really helped me. Shout out Hamdi Zuka. Rest in peace, brother. But, so anyway, man, let's just get back into this, bro. You get the point. So you don't need to have the world's highest win rate. Find your signature quote unquote setup. I'll talk more about mine in the future videos. I won't go into detail. I'm going to talk about the concept of finding a signature setup, how you can exploit that to your benefit, and how you just absolutely don't freaking touch your trading account until that signature setup shows itself, right? But over here, as you can see, liquidity, price comes up, takes it in here, boom, she goes down. So you've entered basically, based off of the top here was an M1 entry, and there's another entry right here, right? So let's say you don't have to take 2. Let's just assume you took the second one. I feel like, especially for some of you guys who are just starting out, I feel like the second one is the most realistic, right? Because why? Price hits in here, is a 15 minute, and another thing, guys, if you were to have waited for that 15 minute or maybe even 5, I don't know, I don't have the 5 minute, but a 15 minute, 30 minute QM, you would not have taken a single loss over here. So you would have had a 1-up over me. Not that you should bother, but I had a loss here, right? You would not have taken a loss. Isn't that kind of cool? You're waiting for a little bit of a higher time frame. So again, find out what works for you. For me, I found out, especially with EU, I don't necessarily feel like I need to wait for an M30 H1. Sometimes I just take it straight off a 4-hour with an M1 M5 with a kill zone confluence, maybe for a little bit of timing and confluence. But that's just me. That's just what I do. So yeah, maybe you took this trade. So you're entering over here. All right, so let me go to the 5 minute real quick. There is no 5. There's only a 15. Lord have mercy on my soul. And let's say you had a stop loss that was right up here at the top, right? At a strong high. Stop loss right there. Where would your target be? Real simple, man. How's gold doing? Yeah, as I said, man, I believe it's gonna fly up a little bit more. It could stop around those H1s though. Watch out for this area. But besides that, I think it's gonna go up to this area, man. This area here. I'll be observing that. It's not something I'm sure of. I'll be observing that. All right. So first thing, you have yourself a H4 H1 strong high, weak low. First take profit. Real simple. If you're not too confident, oh man, there's a bit of an obstacle here. Maybe no worries. You mark this obstacle out. You mark it out, and guess what you do? You freaking wait for a reaction. If there's no reaction, hold your trade. I'm not telling you what to do. I'm just giving you guys an example, right? Maybe you are not a day trader, but maybe you're a bit more of a short-term trader. This trader here lasted 1 day, 2 days, right? After 2 days, you're out. That's it. That's your target. You're out. From strong high to strong low. That's your magic, your little potion to success, maybe. Right? You remember how I told you guys before this, find your own formula to success? Maybe that's what you find successful. That's all you do. 1 week, maybe you just take 1 or 2 setups. Maybe that's all you want to take, right? Maybe your weekly target, maybe it's not about how many setups. Maybe you want to choose your weekly target to be, I have a friend, a good friend of mine. He does, if I'm not wrong, 2 to 2.5% per week or something along those lines, if I'm not wrong, right? And he's making good money, right? 2%, 5%. I forgot whether it was 2% or 5% in a week. Let's assume it was 5%, which is insane. He hits the target for that month. Let's say his monthly target is 5%. He hits that target for 5%. He freaking stops trading until the next month, bro. You see how and he doesn't use crazy stuff, bro. He's just using smart money from ICT. I mean, that's really powerful. Don't get me wrong, but that's what he's using. Everything from his free content. Shout out. I'm not going to mention your name, bro. You know who you're talking about, man. You know who I'm talking about, man. Shout out to you, bro. But yeah, much love and respect to him. He's making it work. Why? It's not 100% because of the strategy he uses. Sure, it's powerful, right? But it's because he's sticking to that 2%, 5%. I think he said 5% per month. He's sticking to that 5%. He's not going more. He's also at the same time not over trading. That is what you guys need to work on next, man. It's not about the setups all the time. Okay, so that would have been your first target. What's your second target? Well, for me, it would be ICT. When it comes to smart money perspective, it would be the ICT, low resistance liquidity. That's what I learned a little bit as a type of liquidity from ICT from my friends. It's not officially from his channel or anything. I just learned it from my friends, right? That would be your second TPC. Even your first take profit would have been 192 pips. That's insane, right? Your second profit, 237. My gosh, I can't freaking read. 273 pips. Your next take profit, maybe over here. Maybe you're a little bit concerned about this area because, you know, we have ourselves a sell buy range with a liquidity as inducement. Price comes in here. Maybe you're waiting for some reactions, but if there's no reactions, maybe you hold. As I said, it depends. Are you a swing trader? For me, I'll tell you what I do. Whenever there's an area I'm concerned about, I wait for a reaction. And when there isn't a reaction, I simply freaking hold the goddamn position, bro. You know what I mean? Because I know my direction. You get me? You know, I know my direction, right? Next area to pay attention to, this sell the buy range over here, bullish OB induced by this low resistance liquidity. Is there a reaction, etc. and etc. You get the point, right? But of course, when it comes to your short-term target, yeah, right here, man. Strong high to weak low, took the sell, you're done. That's it. That could be your entire freaking bread and butter setup, bro. Do you understand what I'm trying to say? This could be your entire shtick, bro. Legit. That could just be all you do, all you preach, all you act on. It could be something else. It could be swinging like me. Who knows? Whatever. Hold on to it and practice it until you're consistently profitable. And man, stop placing such an emphasis on strategies. Start placing an emphasis on your trading plan as well. Because let me tell you something, man. I can teach you a lot of stuff. Let's put it that way. I'm not the world's most knowledgeable person when it comes to forex trading, right? For example, if I were to compare myself to Inner Circle Trader, he is freaking 20 plus years in the grind. I compare myself to him because he's like someone we all look up to in terms of like the forex community and like how much, you know, his knowledge. At least I don't look up to him in a lot of other things, but I look up to him in terms of his knowledge. He's a very knowledgeable man. That's a fact. It doesn't take me, someone like me, to say that, but right, I don't, you know what I mean? Everyone can teach you different things. That's what I'm trying to say. Everyone can teach you different things. The point comes when you say, all right, this is enough. I think let me try working on this for a good year. Make myself a trading plan. Let me stick to this. See whether it really works. Maybe you don't want to take a year. Okay, take 6 months for each strategy. That's something you could do. It depends on how fast you learn things. It depends on how fast you implement things, But yeah, man, that's it. That was the trade. I hope you guys understood and enjoyed this video. 30 minutes in. I think I'm just gonna cap it right there. Have a wonderful day, man. If you guys like this video, hit the like button. If you guys dislike or don't like what I'm saying, or you just don't like me, hit the dislike button. It's cool. YouTube freaking removed it anyway. I could care less. But yeah, you get the point, man. Have a wonderful day, night, wherever you guys are at. Leave a comment down below, man. Hey, I'm trying to look for some video ideas. I'm not gonna cap to you guys, so I am surfing through some of the comments, the old comments especially, getting a couple ideas here and there. But you guys have a wonderful day. Peace out. And most importantly, I pray that my content is and has helped you. Peace out, man. Have a wonderful day.